Good morning. Happy Friday and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi and I'm here with my co-host, the TIE's content director, Lawrence Lewitton. Let's take a look at what's happening in the markets this morning, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is holding steady at 30,113 above that 30K mark. Not much movement in the last 24 hours. Let's see if Ether is following suit. The CoinDesk Ether price ETX index is at 1,873, down just over 1%, but looking pretty steady this morning. And DeFi assets, the DFX, CoinDesk's DeFi index is at 99.91, down about 0.5%. Lawrence, good morning. Happy Friday.
Good. Happy Friday to you.
We had the EDX CEO on the show yesterday. We asked him if he was surprised about the market's reaction to all of this institutional interest. He said he was a little bit surprised, but you have a surprising tidbit to share when it comes to Bitcoin Cash this morning.
Yeah, it's not a surprising tidbit so much as it's just kind of amusing. If you take a look at a Bitcoin Cash chart, and I think a lot of people who like to email and tweet always, they inevitably you'll find a few of them will say that is real Bitcoin. Anyway, whatever, Roger Ver, stop sending me those messages. But you take a look at Bitcoin Cash over the past few days, it's up like 30 some odd percent. And it's because of EDX. EDX, the CEO, as we said, was on yesterday, and he said that primarily the interest in institutions, it's on Bitcoin and ETH, but that they had Bitcoin Cash and Litecoin on the exchange just because they were Bitcoin derivatives. And as such, they could get away with having those on their exchange, on the exchange, and saying, well, we offer some diversity. But the reality is volume not so great on EDX, I would assume, for Bitcoin Cash, it seems. And that's kind of what the CEO said. But Bitcoin Cash fans will look for anything to cheer them up, and any kind of institutional acknowledgement, being noticed. It's like I guess it's like getting asked out. And if you've been a wallflower, if you're a supermodel and you get asked out, oh, of course, yeah, another person. But if you're like a wallflower, the same person is like, oh my God, this is great. That's kind of what's going on here with Bitcoin Cash.
That's what Bitcoin Cash is. And who's the supermodel? Bitcoin?
Dogecoin.
Doge. Okay. Doge could be the supermodel in this analogy. All right, Lawrence, we'll leave that there and see. We'll wait and see if there's any action on Monday. Let's get to our first guest.
The State of Crypto is presented by TRON, connecting the world to the power of cryptocurrency.
If crypto legislation in the U.S. remains lacking, it could make the country, quote, comparatively less attractive for both firms and investors, according to a recent report from Moody's Investor Service. Joining us now to discuss is Moody's Investor Service SVP for DeFi and Digital Assets, Rajeev Bamra. Welcome to the show, Rajeev.
Good morning. Delighted to be here.
All right, let's talk about this report. Earlier this month, Congressman Patrick McHenry and Glenn Thompson released a draft bill that gives a blueprint for digital assets that begin as securities to eventually be regulated as commodities. What's your outlook on the market structure bill?
So the proposed bill seeks to clarify the regulatory roles of the SEC and the CFTC in overseeing digital assets, which is an essential move to resolve contradictions that have come up between regulatory agencies in both the state and federal levels regarding whether certain digital assets should be classified as securities or commodities. So the recent actions that were taken against digital asset service providers have further underscored the need for clear and unified guidelines, and recognizing the potential negative impact of regulatory inconsistencies on the markets and digital asset development. Members of the committee are actively advocating for congressional action to provide the much needed clarity for the digital ecosystem.
Do you think it's a long shot for Democrats to agree to it?
There is a need for, and I think there is an agreement on the importance of consumer protection and a harmonized framework. So, though differing perspectives exist on the best approach to achieve these goals, hopefully we will see some kind of bipartisan agreement on the line.
Yeah, we've gone over a decade without this legislation in place, and we've seemed to come pretty far with crypto. Why? Is this more about I want to say financial institutions adopting it rather than the technology itself from progressing?
Well, we have seen digital infrastructure develop in the past few years or in the past decade, and also the evolution of new market products. These legislations aim to regulate stable coins in particular, along with other digital assets, and designed to establish a comprehensive framework for the digital assets ecosystem, just like we are seeing in other jurisdictions across the globe. So the recent investigations and regulatory actions highlight the importance of compliance and risk controls in the digital finance ecosystem, and it underscores the pressing concern policymakers have regarding digital assets. So, however, the lack of bipartisan agreement and progress on digital assets specific legislation may diminish the attractiveness of the United States for firms and investors, especially considering the advancement of comprehensive rules in other jurisdictions and the migration of resources to more accommodating laws. And that's why the priority of having a digital asset specific regulation in the US at the moment.
But I guess my question here is this, is that if you do have these, whenever you have regulation, you have winners and losers. You have people who will benefit and people who won't, people who will be punished. And essentially, I guess my question here is this. We're seeing now the SEC kind of going after people for securities, for trading securities. But of course, there are those who would argue that centralized exchanges are not in the spirit of what cryptocurrencies are supposed to be about anyway, which is an alternative financial system rather than a way for large financial institutions to do their business with higher profit. So I guess my question here is, what kind of development are we talking about? Is it the development of cryptocurrency ecosystems on their own and to develop as they would naturally, or is it about helping? Bless you. I can make that people sneeze. Or is it about helping the large financial institutions get into crypto without, while keeping their mandate from the federal government?
From what we read and in the market structure bill specifically and the research we are doing, it looks like the regulations are kind of, or the framework will highlight how the existing regulations apply and impact the growing digital finance ecosystem. And besides that, the need for more stringent regulation in terms of stable coins and digital assets and the financial structure they have, how would that apply to the existing regulations, and following that, the need for new regulations or new framework in place for digital assets would follow.
Moody's talks about the key division between Democrats and Republicans being over the role of state regulators. Can you talk to us about why that's significant?
It is worth noting that in the past few years, there have been numerous bills addressing digital finance in the U.S., indicating the increasing attention given to the sector. The diverse range of perspectives among lawmakers, both Democrats and Republicans on both sides of the aisle, reflects the complexity of the issues at hand, particularly regarding whether federal or state entities should oversee the regulation of digital assets, particularly stable coins. However, at the heart of all these discussions, we see a shared commitment to ensure consumer protection and fostering a secure and thriving digital assets ecosystem. But it is important to have a constructive dialogue and work towards finding common ground.
Yeah, you just mentioned stablecoins. I'd love to hear what you make of Federal Reserve Chair Jerome Powell arguing for the need for strong central bank oversight when it comes to stablecoins.
Yes, so the draft framework of stablecoins that we see being debated upon by Chair McHenry has proposed that state regulators should supervise issuers instead of the Federal Reserve. However, this approach of differentiating between bank and non-bank issuers at the state and federal levels could result in regulatory fragmentation and risk disparities. It may also lead to varying sets of rules for different issuers, potentially increasing regulatory arbitrage and compromising consumer protection. However, this aspect of McHenry's draft has been debated by the Waters Bill, or the 74-page text of the Waters Bill, to strictly prohibit the commingling of customer assets with those of the companies behind digital wallets. And that's why the need for more enhanced regulation and more defined regulation for stablecoins is important.
Rajeev, thank you very much for joining us this morning.
Thank you, and glad to be here.
Great. Have a great weekend. That was Moody's Investor Service SVP for DeFi and Digital Assets, Rajeev Bamra. All right, let's talk about Prime Trust now. Prime Trust has had a rocky journey in recent months, with the Nevada regulator saying the firm has, quote, a shortfall in customer funds following BitGo backing out of buying the crypto custody firm. Joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's State of Crypto newsletter. Good morning, Nick.
Good morning.
All right, Nick, yesterday we learned that BitGo was backing out of the deal. Now we have the Nevada regulator coming out. Tell us about what they said. Let us know what's going on.
Yeah, so yesterday the Nevada Department of Business and Industries Financial Institutions Division, which is the state-level regulator overseeing trust companies, among other types of entities, published a cease and desist order saying that, among other things, it alleged that Prime Trust had a shortfall in customer assets. It had a negative equity stockholder position. They claimed that Prime Trust breached its fiduciary duty, and basically said that it is no longer allowed to operate as a trust company in the state of Nevada. The company has 30 days to request a hearing on the allegations. Otherwise, this cease and desist will become a final order. And that's basically where we're at, is waiting to see what Prime Trust might do to respond.
Nick, what do you make of the speculation that they might face bankruptcy?
The allegations are pretty serious. I think any company that is accused by their own regulator of not having sufficient customer funds and not being able to meet withdrawals probably runs the risk of having to enter bankruptcy.
And so what does this mean for TrueUSD, the stablecoin there?
So the stablecoin, despite saying earlier this month that it had no exposure to Prime Trust, announced yesterday that it had some issues with allowing withdrawals and redemptions because of Prime Trust issues. So, I think TrueUSD and other entities that have relied on Prime Trust as a banking partner, again, the CND said that Prime Trust was unable to meet all withdrawal requests. So any company that is a customer of Prime Trust that hopes to use Prime Trust's rails to, facilitate fiat withdrawals might be in a bit of hot water, at least right now.
Oh boy.
And any other thoughts on what might happen next?
This is, oddly reminiscent of some of the banks that we've seen over the last couple of months. Obviously we saw Signature and Silvergate and Silicon Valley Bank, not quite the same, but they had issues with, their liquidity prior to, being shut down. So, and in those cases, it turns out those companies were insolvent. Nevada has alleged that Prime Trust is, it's either running at a huge deficit or it might actually be insolvent. They gave a little bit of, leeway in the language, so we don't know for sure. But unless Prime Trust is able to say or prove that it has the assets it needs, then the next steps might well be that we see some kind of either receivership or bankruptcy or some other legal action.
Nick, thank you very much for joining us this morning. We hope you have an awesome weekend. That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Coming up, we'll take a look at what's going on in the markets as Bitcoin holds around $30,000.
So Bitcoin is hanging around the 30,000 level for the weekend, or at least for the time being, as we had 3 applications for Bitcoin ETF. Let's see how those go. But joining us now to discuss further is 21.co co-founder and CEO Hany Rashwan. Welcome back, Hany.
Hello. Thank you for having me again. Good to see you guys.
Good to see you. We had this rally in Bitcoin, not just Bitcoin Cash, as we talked before, but actually in Bitcoin itself, 20% or so up in about a week or so. Is the sentiment truly changed in the market? Have we gotten to this positive? Have we changed the attitude, or does the specter of a Fed hike in July still weigh on the markets somehow?
I think it's a little exaggerated. A few weeks ago, I think we saw the opposite with the Binance and Coinbase lawsuits in the fears and uncertainties and doubts that came from those. And I think we're experiencing something similar with the flurry of recent ETF applications. Nothing on the ground has fundamentally changed, although obviously it's very nice to see positive sentiment start to trickle back into the markets. I think it's largely still about rates, and there's still a number of regulatory hurdles that need to be addressed, and we need to understand where we're going first before we get too excited about some of these smaller applications.
We just talked in a previous segment about BitGo and the pulling out of this deal to buy Prime Trust, and of course there might be some repercussions for TrueUSD, small player in the stablecoin market to be sure, But if anything bad happens, God forbid, of course, but if anything bad were to happen, would that once again shake the market? Would that be a return to what we had in the late winter, early spring with the regional banks falling apart in a couple of places?
I don't think this is big enough for it to have such a material impact. I also think it's just part of the news cycle right now, very similarly to what we've been experiencing over the past few weeks, arguably over the past year. A lot of people are over-exaggerating the news. This is completely normal. There's going to be a ton of deal making in crypto and in tech overall because of the economic situation, because of people running out of venture capital. And through any of these M&A processes, you'll do a standard due diligence check. And it's quite likely that a number of opportunities that may have been selling opportunities in the first place due to some bad behaviors or bad performance, et cetera, inside could dissuade a potential acquirer. And so I see this as completely normal, and I don't think that this is monumental enough to have any material effects over the medium term on crypto markets.
On the topic of stablecoins, the total stablecoin on exchange addresses has increased 5.6% since June 14th, according to on-chain analytics from Glassnode. The increase ends a 60% decline. What's your outlook on stablecoins, given the stablecoin regulation that we spoke about earlier in the show?
We love stablecoins. We love stablecoins, and it's the easiest, best answer to give to anyone that says crypto has no use cases. Talk to the millions of people around the world who have used stablecoins. They're becoming easier. We are still improving the UX and the UI of them to make them even more easier for users. But stablecoins have been one of the killer use cases of crypto, and the future is bright for them in every way.
Do we get back to crypto? At what point are we going to see this? Talk about risk here, and talk about crypto as that risk-on asset that we've learned to love it as. We have a 99.99% chance of recession according to the bond market. Actually, 109%. Chance of a recession last I checked, based on the yield curve downward sloping and being what it is. What does that mean in general? And Yellen now saying there's a recession looming. Thanks for spending all that money. And what does it mean ultimately for crypto? And does it counteract against any of the sort of positive moves that you cited?
I think that we're a part of this world, and we're a small part of the wider financial world, and obviously a lot of this will affect us. It still comes down to rates. It still comes down to regulatory uncertainty being key roadblocks here. It's also important to mention that crypto is not the only risk-on asset. There are numerous others, and venture capital is a great other counterexample that is non-crypto specific and similarly going to be affected negatively and positively throughout these gyrations.
Yeah, you mentioned venture capital, and they're also facing the nightmare of higher rates, because all of a sudden they have to perform above a certain hurdle, which a lot of these kids have never seen before in their short careers. Does it? I guess that's the question I have overall. Are we seeing? My question here is, what's the worst that can happen?
Okay, so I'll give you some positive spin. I think we're much closer to the bottom than we ever have been. I still think that there's a lot of cleanup that is necessary and that is still ongoing, and it'll still be a while. I don't think we're out of the woods yet, but a lot of the really heavy lifting has already occurred. A lot of the bigger issues have already been priced in or have already been affected. We've seen a year where we saw the collapse of Luna, then FFTX, then a number of other related players. And we're still cleaning up a lot of that, but most of the big work, it feels from my perspective, has been done. And I really look forward to 2024 on a number of issues, on inflation and on crypto as well.
And are we going to see this kind of breakaway of the two majors, Bitcoin and ETH, from the rest, even from layer ones? I mean, we see these other layer ones now under attack from the SEC. And regardless of what kind of legislation goes through Congress, it's going to be a while. In the meantime, there might be some hesitancy for institutions to hold these kind of things that would ultimately be deemed securities. So are we going to see kind of a separation from the rest, from the alts basically underperforming the majors as time goes on?
So first of all, I think it's important to differentiate between the United States and the rest of the world. Certainly, what we're seeing in data, and we're the world's largest issuer of crypto ETFs, is a lot of flight to quality, flight to the two biggest assets, Bitcoin and Ethereum, and the bigger baskets that represent the market, which oftentimes are 70, 80% Bitcoin and Ethereum anyways, are taking most of the inflows. A lot of the important and big layer ones are getting something, especially in markets like Europe or Asia. However, we do see a consolidation here. That being said, during the last bear market, we saw very, very similar behaviors. And then we got to see DeFi season. We saw BNB rise, Solana, Avalanche, and others rise. And so we remain super excited about some of the things we're seeing from Lido, Uniswap V4, and others. But during bear markets, it does tend to have a bigger flight to quality.
This time is different, and that is, of course, this time is different because this time we have a SEC chair who is pretty much targeting these alts, whereas the last time it was just the market was kind of like, yeah, whatever. I mean, the markets can change opinions. Regulators seem to not so quickly. Does that also have
nothing has been determined yet? And this is my point on, I think we're over exaggerating this in a number of different ways. Ripple was alleged to be a security many years ago. We still haven't determined that. And the most interesting thing about these lawsuits is that among the assets where there are further allegations that they are securities, Ripple, which the commission has been working on proving is a security according to them, is not mentioned. So this is going to take a very, very long time. The American view on this and the global view on this are quite different. And it's just important to take this one step at a time, understand where we are. And more often than not, really, things are not going to be that different from what we experienced before in cycles.
We talked about the ratio between Bitcoin and Ether and the altcoins, but now let's talk about Bitcoin and Ether itself. The correlation sank to a 2-month low. What do you think is going to happen between the price correlation Bitcoin and Ether moving forward?
We love to say inside 21 Co that bear markets are for building, and you'll see in Q4 this year what we're talking about. We're very, very excited about this. We think everyone does this across the asset class. What we've been seeing in terms of innovations on Bitcoin being a platform with NFTs like Ordinal's launching very, very interesting innovations like recursive inscriptions that overcome some of Bitcoin's smaller block size. We've seen a lot of the scaling that Ethereum has been working on. It is the most exciting part about this, aside from the ratio, is that you will end up seeing a lot more of these innovations and a lot more of these competitive dynamics that will continue to push people to Bitcoin and Ethereum, now with additional features. And as someone that really cares about crypto being used in the real world, this is a good step forward.
Hany, thank you so much for joining us and giving us that positive outlook on a Friday.
I'm super positive this year. It's going to be fun. Thank you, guys.
That was 21 Co co-founder and CEO Hany Rashwan. Coming up, self-custody firm Casa now supports both Bitcoin and Ether. We'll speak to the CEO about the future of crypto custody after this short break. Welcome back to First Mover. Casa, a popular crypto self-custody firm historically focused on Bitcoin, added support for Ethereum this week. Joining us now to discuss is Casa CEO Nick Neuman. Welcome to the show, Nick.
Thank you. Glad to be back.
All right. The fully revamped Casa app now provides private key management services for Bitcoin and Ether. This was a milestone that you were working towards. It's finally come to fruition. Tell us about it.
Yeah, supporting Ethereum has been one of the most requested features from Casa members for the last couple of years now. And so we're incredibly excited to give people a really easy way to secure their Ether. And that's in a way where you don't just have one key protecting your funds. And if you lose that key, you've lost all your money. You've got multiple keys, gives you extra resilience and peace of mind that your assets are safe.
What took you so long? Why 2 years? You said it took 2 years. It's something customers requested. Bitcoin, ETH. I mean, that's like 80% of the market right there. What took so long to add ETH?
Look, we have two reasons. One is that as a security firm, we want to stay focused on making sure that we really secure fewer assets with our customers and do that incredibly well. We want to be, an inch wide and a mile deep, not a mile wide and an inch deep when you're doing security. And then the second reason is we have an incredibly high bar for user experience in the Casa product. And we wanted to make something that was 10 times better and 10 times easier to use than everything else out there in the multi-sig market in Ethereum today. And that takes time, and that's time we're willing to spend to make it right.
Is there a scenario for users who want to hold on to all of their keys to do that?
Yeah, so people that use Casa hold all of their keys except for one, and that key is held by Casa just as a backup. And that key can't move. We cannot move funds for our customers with just that key. The customers always have to be involved in the transaction, and they're always using their keys to approve transactions. And this is just a significantly better model than both the fully custodial model and the model where people only have one key, where if they make that mistake, they could lose all their money.
This seems to be the hot thing right now. Everyone with the self-custody. I mean, how much traffic spikes did you see after the FTX debacle?
Yeah, we definitely saw an increase in traffic and new customers after FTX. But the thing is, it's kind of a tale as old as time at this point, right? Every few years it comes around and all the custodians go and implode. And the people who are in self-custody and have a secure setup where they're holding their own keys are safe. And we're seeing it play out again, potentially with Prime Trust right now. It's something where when you are securing meaningful assets in Bitcoin, Ether, and other cryptocurrency, you really want to be holding your own keys in the right setup. It gives you significantly more resilience against all the market movements, against some of the misaligned incentives of custodians. It's really important to be holding your own keys, and we've seen a lot of people interested in that.
We've had competitors of yours. For your sake, I'm not going to repeat their names. Also, it's too early in the morning for me to remember. But the other thing, the thing that they seem to have said is that it's not for everybody. That you are going to have people who will want to do self-custody. You do have other people who don't. How much of a percentage, realistically, of the crypto market do you guys see self-custody ultimately taking? Or do you think that people still don't have that mindset? They're still kind of nervous. They still like to use banks. They still like to use some sort of centralized custodian?
Well, I think there's a difference between what's happened historically and what will happen over the next decade as we look ahead. It's never really been practical to self-custody any kind of money historically, because it's always been physical. It's been something that you needed to have storage space in your house or somewhere safe in order to protect physical volumes of cash or gold or whatever it is. And Bitcoin comes along and makes it so you can self-custody. You can hold millions of dollars worth of Bitcoin or Ether on a thumb drive. And that's something that is a significant practical change in the way that people can secure their money. when you combine that with the fact that the people who really care most about securing their money are the people who own it themselves, we see self-custody being something that the majority of holders, especially individual holders of crypto, do over the next decade. It's especially with advances in the ease of use around self-custody itself, that Casa is driving, that others are driving, that percentage is going to increase significantly, and we see it being the case that the majority of people want to hold their own keys.
By the way, when you say that you offer support for Ethereum, that's for ETH itself and not for ERC20 tokens, correct?
That's correct. And we're making sure that we roll out ETH first because that was the most highly requested next edition for us. But we are already hearing from customers, hey, when can I secure my stablecoins in my Casa vault? And so we're definitely looking ahead to some of those next things and listening to our customers very closely as we're helping them get set up with their Ethereum vaults.
Digitized Chinese commercial paper, I guess, would also be. Is that too soon of a joke to make on Tether's behalf? Sorry.
It's too soon, Lawrence. It's too soon. Some of the competitors that Lawrence mentioned have spoken about targeting, the next 100 million users who are going to come into Web3 who want to self-custody their assets. It sounds like those users are also top of mind for you. With all of these self-custody solutions popping up, all of these competitors for you, what's the future you see? Do you see a lot of these solutions falling off and us having one winner, or are there multiple players who can play in this market together?
I think there's multiple players who can be in this market, but the difference is that Casa is really going for something very different than what most of these other simple wallets are trying to build right now. Casa really views private keys themselves as a new primitive where not only will they help you secure your money in the form of Bitcoin, ETH, or other cryptocurrency, but private keys are a better way to secure your identity, your communication, your personal data. All of these things are becoming more and more important to have secure, have private, and have real control over in the digital age today. And so being the home for your private keys, Casa is going to be much more than just a wallet and much more than competing with the other self-custody wallet providers. We're really building a private key manager that will secure everything important in your life. That vision is significantly bigger than what other people are thinking about right now.
Like who's your target audience really? I mean, it's everyone's well, anybody who wants self-custody. It's like anybody who breathes air is a target audience for this. No, I mean, like realistically, who are you looking at? Is it the Midwestern housewives? Is it farmers in Florida? Like what? Like realistically, who are you targeting?
So this is always a exercise in making sure that you target the right segments as you build your business. And that's how we really view it. We're not trying to boil the ocean immediately. While we do think private keys are applicable to the majority of people in the world over the next couple of decades, it's not going to be something that happens overnight. And so who does Casa really excel at helping and solving problems for today? It's people that hold a significant amount of Bitcoin, Ether, other crypto, and generally have a lot of desire to secure that wealth because this is meaningful wealth for themselves, for their families, for their business. And so those are the types of people that really Casa helps solve problems for and helps solve immediate needs for. And so that's who we focus on in the short term. And then we start to grow out from there as more and more people understand the benefits of self-custody, and we're helping to tell that story and bring them into that fold. But those people that are holding large amounts and who really need to secure this for themselves and their families, that's the type of customer that we're really great at serving today.
Nick, thank you very much for joining us this morning.
Thank you both. It was great to talk.
Thanks.
That was Casa CEO Nick Neuman. That's it for First Mover, and that's it for the week. Lawrence, I hope you have a great weekend.
You and me both. You too.
I'm Jen Sanasi. Thank you to my co-host, Lawrence Lewitton. First Mover is back on Monday at 9 a.m. Eastern Time. The Hash is on today at 12 p.m. right here on CoinDesk.com. You're watching CoinDesk TV.